1. Determine the market size. Assume that you're considering ideas to start an online business for the first time. You use the same process as you would to assess an existing product. You're taking more risk because the sales performance of the product is completely unknown. Find tools to research your potential market. You may choose to examine existing businesses that offer a similar service. What are their clients like? What are they willing to pay for this type of service? How crowded is the market? For your identification service, you might choose to examine the type of people who comment on watch forums and other watch websites. Assess their needs and really consider if there is enough of a market for your services to make starting a business worth it. 2. Determine your costs. In order to plan for your business, you'll need to assess how much you will need in startup money. This will vary widely between business types, with some requiring almost zero startup money, and others requiring many thousands of dollars. Start by looking at equipment or inventory you currently have. Then, figure out what you need. Think about inventory, production equipment, website building expenses, and any other costs that you can expect in your first months of operation. Locate these items used or at a discount if you can, and then record the prices to determine your startup capital needs. 3. Develop financial projections. Financial projections can be difficult to project, especially if you haven't yet begun operations. However, do your research by searching for sales data relevant to your industry online. Check with the Bureau of Labor Statistics (BLS) to find this data and other important information. Then, use this data to estimate your sales volume over your first 3 years. Your projections don't have to be perfect, but they need to be reasonable and backed by concrete numbers. Subtract your projected startup costs and cost of goods sold during this time to estimate your profitability. 4. Assess your capital sources. Unless you have startup and working capital in a savings account, you will need a source of capital to get your business started. Your options include loans from a friend or family member, bank loans, and selling equity to investors. Bank loans may be difficult to obtain, unless you opt for one backed by the Small Business Administration. Check with local banks to see what SBA loans they offer. You will need to have a strong business plan to qualify for such a loan. Loans from friends and family are a great source of capital as well. However, the risk is that you lose the money that they lend you and your personal relationship may suffer as a result. 5. Write a business plan. A business plan is a roadmap for your business and its growth over the years. It includes several distinct parts that outline your operational plans and business information for prospective investors or lenders, or just for your own guidance. Include all of the above information in this part in your business plan. In addition, you'll need a description of the business and its offerings, a marketing plan, a description of business structure, management profiles, a break-even analysis, an explanation of how and where borrowed funds will be used.